With hundreds of thousands of followers across all social media platforms, one of the biggest influencers in India for trading.
90% of the people are scamming. 90% of the people don't even know how to trade. 90% of the people don't trade themselves. They're just trying to sell a course. And because of that, majority of the population who even wants to trade has developed a very negative mindset towards trading and people who are trying to preach trading. And because of that, people who are genuinely trying to help others also get a lot of hate.
Now, trading is actually banned in India. So when it comes to the trading space, there's a lot more to navigate in the Indian markets. But Umar has actually found financial success, moved out to Dubai and become a full-time trader out here.
One very important lesson I've learned is technical analysis is enforcing your ego on the chart. If you draw a trend line, for example, that's your ego on the chart. The market has to do what it has to do because the market doesn't know you've drawn a trend line over there. So if it has to go down, it's going to go down. If it has to go up, it has to go up. Doesn't matter where your trend line is. So the number one thing I look for is proof from the markets that it looks like this is a valid zone. One of the biggest mistakes people do with backtesting is they lie to themselves. Before you start backtesting, things should be very clearly defined. What is the time frame I'm looking at? What session I'm looking to trade? Because what I've seen people do, their strategy says I'm going to trade the London session, but when they're backtesting, they see a trade opportunity in the New York session and they consider it as a trade they would take. Well, actually they would not take that trade.
How do you go from I know a lot about this topic, I see a lot, versus I have now proven I have an edge and now I can go and buy these prop firm challenges?
If I have to put it in the most simple manner, I would say.
So ladies and gentlemen, welcome back to another episode. Before we get into the podcast, I just want to spend a moment to explain something. So I respect your time the most, meaning I don't want to bring an episode to you guys if I don't feel like you'll either be entertained, learn something, inspired, or have actionable steps to take away from to improve your life in any way, whether it's trading, whether it's business, whatever it may be. And my idea is to bring guests on and get the most value out of them so that I can bring the most value to you. Because I know if you're going to invest an hour of your time every single week into the Titans of Tomorrow show, I better make sure it's worth it. So I want to make sure we get the best videos for you, the best value for you. Now, this sometimes means I might come across a little bit intense. Now, the reason I say this is because in this episode, it was quite an intense one. It's because I wanted to get the most out of the guest, so I kept asking very deep questions, very specific questions, very technical questions, challenging his opinions at times, giving my beliefs at times. And I know some of you are not really here to hear my view. Some of you only want to hear my view. So I have to manage a lot of things. So the reason I'm here right now is to simply say, bear with me in this episode. It's quite an in-depth episode going into a lot of technical details specific to trading, risk management, psychology, and all these kind of areas, but really challenging each other's beliefs. Myself and Umar really going in depth into our beliefs, challenging each other, and also having a great chat. And as always, forgive me if you don't like my style. I always try to do my best. I don't want to come across in any negative way. I am just trying to do my best, learn the most from the guest, and also bring the best value for you. So if you have in the comments any feedback, any suggestions on any episode, please do let me know. I'm always open to constructive criticism. Ladies and gents, welcome back to another episode. I'm joined by someone from India, our first Indian on the show, Umar Punjabi. Did I say it correctly?
Yeah, you did actually.
There we go. So first of all, the thing that struck me is you're one of maybe the youngest guests I've had on the show.
Oh, is it?
Your age being just turned 22.
Yep.
So at your age, a lot of people, including myself, we didn't have our life together.
Yeah.
I didn't have my life together at 22 at least. I was still a student, whereas in your situation, you've got a lot of independence financially, geographically, and you've done a lot for your good age. So first of all, I want to get into number one, being a trader in India, because I know there is certain restrictions, limitations, and also why are they giving you these headaches, let's say, and then navigating that terrain at a young age.
Yeah. First of all, thank you so much for having me. You're giving me surprises because I did not know I'm the first Indian and I'm also one of the youngest. So it's great to be here. And let me answer your question, which was how was it being a trader, and especially a trader in India. So obviously it was not easy. And because the market conditions, if you look at how the Indian government is playing around, I mean, I'm being as blunt here or as honest as possible. The Indian government, they generally don't understand non-traditional businesses. They generally don't understand unconventional ways of making money. And they have a very simple mindset. If they don't understand something, they're either going to ban it or they're going to tax it heavily.
Okay.
They have a very simple rule, right? So crypto is one of the best examples. They don't understand crypto, 30% tax straight up. Not even on the capital gains, but on the transactions. So if you make transactions, there's 30% on that. And I think there's additional 10%. I think they call it TDS, tax deducted at source, something like that. So the entire Indian market, if you look at it, it is basically placed in a way where it's not for a trader. It's genuinely not for a trader.
This word matrix is a very buzzword in the West.
Yeah.
Is that also a term you'd use for the situation you have in India?
I would definitely use that as a term. Yeah.
Aside from, let's say, ignorance, or they don't understand this, so let's tax it. It's hard for me to get this because whenever I've come across people from your country, they're always very hardworking and very well educated, especially the ones that make it to the West or that I've come across in the UK. Very highly qualified, very highly educated, very smart and very hardworking. And they don't have this entitled mindset that a lot of people in the West do.
Yeah.
I think that comes from a lot of people are on the poverty line. So when you're so close to struggle, it gives you a fire inside yourself, where in the West, people are comfortable. So you don't have that same galvanization. And second of all, like it's go big or go home kind of feeling. And you also know there's a billion plus that you're competing with for the same university, the same school. So I think it births a very competitive and success orientated environment. So when I see people like this that I've come across in my experience, and then you tell me the people in power, they just don't understand it. How does that happen? Like the complete ignorance of banning trading. They put so much restrictions on forex, commodities, even stocks. Crypto is just heavily taxed. Why is that, do you think?
I feel one of the major reasons is the people who are actually in authority, they themselves are not qualified to the best. That's why you will notice that the best qualified people in India, they just move abroad. They just don't stay back in their own country because unfortunately the environment is such that if you are an honest taxpayer, if you're paying your bills, if you're being honest, if you're doing what you're supposed to do, you're not going to be appreciated, unfortunately. I mean, it's the environment that forces people to just move out. And I feel there is a big shift that is required in the country and in the government and in the education that the main people who are taking the decisions do. So that is really required. But once again, I feel one of the biggest reasons is corruption. One of the biggest reasons is that people just want to fill their own pockets and not really think for the benefit of the people.
A lot of the viewers of the show, when I look on the analytics, is number one is UK, then US, and a lot of Europe, meaning to say a lot of the people, and including myself, we come from a very privileged background. We all had the internet since we were young. We all had iPhones. We all had freedom, everything. It was a lot easier. And already trading is hard. To learn everything, we don't have a traditional route. We have to find things online, get scammed a few times, and make our own way. And what gets us through is hard work and time. But at least we don't have to walk uphill. We just have to put ourselves forward. Whereas in India, it seems like you could do all of that and still be stuck because of the systems in place. So how were you able to, let's say, break out and navigate a tougher situation than myself or a lot of the viewers?
So I would suggest, I think, it is just about understanding where you're placed, dealing with the cards you're dealt with. So I think I just understood where I'm placed and I did the best I could. But I would also say that I was lucky enough to be part of this market where things were a little bit easier during the time I started off. So the leverage that is banned currently in India, the taxes that are very high now in India, this has happened very, very recently. I would say in the last 1 or 2 years.
Okay.
And by that time, I was already in Dubai. I already shifted markets because honestly, I could see it coming. I could see that coming. I could see all of this happening. And that is exactly why I shifted here. So I would say I was a little bit fortunate. I was a little bit lucky to, be in that time frame where all this did not get so difficult. But I would say that is one of the things that helped me a lot. But also it was taking this risk of shifting to a whole new market, shifting to a whole new country, that has helped me immensely.
So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow. So was the primary driver to move to Dubai was remaining access to the forex markets, or was it a taxation move?
I would say it was both.
Okay. If you were still in India, would you be able to trade? Like, is there ways to circumvent, or it's done? It's blocked and you can't use leverage, you can't trade?
There is a way. I mean, are you asking me about the forex markets? Or
let's say you were not in the situation where you could move, or a lot of people that are from your audience who are based in India, they can't leave, but they want to learn how to trade. What can they realistically do?
Realistically, I would say number one is find an income source, build multiple streams of income, because I get this a lot, right? People tell me that, okay, you moved to Dubai, but what am I supposed to do? I don't have the money to move to Dubai. I still want to trade. I still want to learn. And I tell them only one thing, that number one is try to make money wherever you can. Play with the cards you're dealt with, and just focus on creating an income to a level where you can quickly move here and then make the most out of it. But to answer your question, there is a few ways where you can still trade with Forex, but unfortunately that is all unregulated. That is all not appreciated by the government. So let's say if you're trading with a sizable amount, let's say more than $10,000.
Oh, it's actually quite low.
It's actually
The
quite low.
cap, okay, yeah.
But for Indians, that's a lot of money. That's for some people, that's their yearly income, right?
Yes.
So $10,000, if you're trading above that, you might get some eyeballs on you. You might get some government officials, keeping an eye on you on what this guy is doing. They might freeze your bank accounts. But if you're doing something below $10,000, I feel it should be relatively safe. Once again, do I recommend somebody doing it? Absolutely not.
In the West, especially on the YouTube space, the buzzword is $10,000 a month.
Yeah.
It's be a millionaire and $10,000 a month. Now, that is because cost of living and so forth. 10,000 is a very comfortable number, and you wouldn't have to check bills, and you'd be living a good life. That probably is excess in India.
True.
So what is that kind of number that people idealize and say, this for me is like I've made it as an income?
I would say as an income, something like 200,000 Indian rupees a month is something
What would that be
people
in dollars?
really idolize. That would be around $1,600 or $1,800 a month.
As like a equivalent to 10K in terms of buying power. And
Yes.
okay, so that begs the question to me then. If you have such regulation and difficulty with brokerages, leverage, prop firms are still quite new as a model, as an industry.
Yeah.
And I don't know if the regulators have got a chance in India to do anything about it. Is that still an opportunity for Indian traders?
In fact, that is the only opportunity as of now for Indian traders, because people in India, especially the government officials, they haven't understood, or I think they just haven't gotten their eye on the concept of prop firms altogether. But unfortunately, from the prop firms perspective, they don't process withdrawals in the Indian bank accounts. So
then it has to be crypto, and then you get your
it has
tax.
to be crypto.
Okay,
Yeah, it has to be crypto. So once again, if it comes in crypto, you have to be taxed 30%, this and that. But prop firms, if somebody asks me, I give them only this advice, that prop firms is the best way to escape this entire system and quickly move your base. But yeah, that is the best thing. An Indian trader who wants to get into the global markets, who wants to do Forex, that's the best way to do it.
I've had a few traders on the show who are big in the prop firm space. They've got either large capital or large payouts. And it seems like the consensus is very much the same, which is trading is no longer a game of how much return you can make.
Yeah.
It used to be when you had a brokerage and you didn't have prop firms, then it was like, okay, I can only afford X amount in capital. My life savings, maybe some investor. Let's say you've got $100,000. That was a very strong amount to have in a trading account. So then you were almost required to do big percentage gains annually to be worthwhile.
Yeah.
Now with prop firms, it's just, okay, well, I don't need to go for 50%, 100% gain. I'm okay with 1% a month.
True. Yeah.
And especially if the barrier to success financially or freedom financially in India is just $1,000-$2,000 a month, prop firms is the golden gate.
Absolutely.
You just need to make, if you get not even a few $1 million, like we've had a few traders on the show, is just you get 200K, one prop firm, and just go for 2% a month. Super achievable. Is this something that a lot of Indians are grabbing hold of, or is still quite an immature market for trading?
I would say after 2020, after the COVID crash happened, after the lockdown and everything happened, after that, the Indian market is maturing very fast when it comes to trading. This entire trend of trading has really picked up. I think not just in India, but around the world itself. But I would say it's a fast growing market. I would not call it immature.
Okay. One thing that I find fascinating is I'm very aware of the trading space in the English markets, English speaking. And I know all the big names, and let's say, and we are a big community of English speakers and so forth. But then there's probably more people in India.
Yeah.
And therefore you have your associated influences. China is just as big and has their associated markets. I feel like you have your eyes on both sides. You have your Indian influencers, Indian traders, and you're involved in that space. But I guess you keep an eye on the English-speaking side too. Do you notice any major differences in attitudes, perception, how trading is promoted, spoken about, or is it the same thing? A lot of gurus and so forth.
That's a very good question. The Indian community, when I look at it and when I talk about it, I'm really sad to say this, but it's one of the most toxic communities that you can come across, because 90% of the people are scamming. 90% of the people don't even know how to trade. 90% of the people don't trade themselves, and they're just trying to sell a course. Unfortunately, this has what has happened to most of the people who have tried to learn trading, and because of that, majority of the population who even wants to trade has developed a very negative mindset towards trading and people who are trying to preach trading.
Okay.
Right? And because of that, people who are genuinely trying to help others also get a lot of hate. So that is something, that is a big difference that I noticed. I'm sure that there are also scammers in the English speaking community. I'm
for
very,
sure.
very sure of that.
Yep.
But the kind of hate that I've seen here is just unbelievable.
Okay. I mean, it's tough for anyone trying to make it in this space, but I think the thing to hold on to for any country that someone's watching from is it's the best time to be a trader. I know in India there's some restrictions that maybe could be bypassable or not so much, but the reality is we have prop firms and we don't need large capital. Education, you don't really need courses. Actually, courses will speed things up and you can learn from other people's mistakes and lessons, but everything's online. And you can learn everything online. And what I've noticed is the attitude of traders is we get caught up, and I think it's the schooling system that we're always taught to pass and get very good grades, we need to study more, do more. So the mistake becomes studying equals productive, which in traditional life is usually good, but in trading it's not, because there's no such thing as perfection in trading. There's no such thing as an A-star grade. You will always have a losing period. You'll always have even if you have a 70% win rate, which is good, you'll always have 30% that lose. So we're always having to accept that it comes with the territory of negativity. And therefore what we, including myself, used to do was, okay, I need to study more because I need a better win rate and I need to do more and do more. And what I realized is I reached a point where I had to just accept a win rate, and more so that win rate is not telling me how good I am. A win rate was more, I can choose it. If I want a high win rate, I'd be very selective. If I want a low win rate, I take counter trend, hedge trades. I can select my win rate. It's not a performance metric. So when I really started to understand that, I was like, okay, well, I don't need to then focus on more studying, more strategies, more. It was just now experience, going into the market and what I've learned, putting it into practice. And the mistake I used to make, and I see a lot of traders make, is we'll have good ideas, we'll have good concepts, we'll have good confluences, and we'll see these trades that follow the plan, A+ setups, maybe once a week, once every 2 weeks, once a month. So they happen. But we're taught as traders, show up every day, look at the market every day. So what happens is, today is not the day. Maybe the trade I wanted, that's all stars aligned, is on Friday. Now it's Monday. I come to the market, nothing. Tuesday, nothing. Wednesday, nothing. Now what I'm going to start to do, I'm going to get itchy. I'm going to, but this, what if this, what if that? And I feel like a lot of traders, including myself, get caught up in the, what happens if this? What happens if that? What do I do in this situation? When sometimes the answer is do nothing. So that's kind of been my experience in the first few years of my training, is accepting I didn't need to study so much and stick to a strategy. What was going to carry me through was not education, it was experience, and being able to just sit on my hands and wait for the prime setups. You've been trading since you were 15, right? 16. So 7 years.
Almost 6 years.
6 years in the game, a long time. What would you say were your major lessons in your first 2-3 years, and then your most recent lessons in, let's say, in the last year?
I would say one of the major lessons were just first accept that there's a problem and identify it and then try to solve it. The biggest problem that I see with most traders is that they don't want to accept there's a problem. Like, okay, I took a trade today, I lost because I did not follow my plan. Understood. Tomorrow, I do the same mistake. The next day, I do the same mistake. And I believe this happens because people don't journal. But when you journal, again and again, if you see the trade going wrong because of the same reason, you will understand that there's a problem with my discipline. There's a problem with my, habit of not following my rules. But unfortunately, what I've seen most people do is they don't want to accept that they're not following the rules. They don't want to accept that I'm not disciplined. So one of the major lessons I learned during my initial years was, first is to accept there is a problem, because you can't solve a problem which you don't know exists. So accept there's a problem, then you learn how to solve it.
There's a big debate in the English space, and I'm sure in the Indian market too, which is some people say trading is 90% psychology. Other people say trading is only 10% psychology. Other people say it's all about fundamentals. Other people say it's all about technicals. These three main areas: psychology, technical, and fundamental. How would you distribute the importance in percentages? Which one is the most important and which is the least?
I personally feel trading psychology is 90%, having the weightage in terms of importance, and technicals or the rest of the things is just 10%, like you said. That is how I would put it. Now, once again, I'm not the best person to speak for the entire community, but this is what my experience has taught me.
Why do you believe psychology is so important that you put it at 90%?
I believe in one very important quote that I've read somewhere is the way you do one thing is the way you do everything, right? So if you're going to be indisciplined at the gym, most likely you're going to be indisciplined in trading as well. So trading psychology is not a very alien thing. It's actually just a part of your entire psychology as a human being, right? So that is why I feel it is so important, because people are not successful because they are master traders. People are successful because they work here. They have the right mindset. And if you take the right mindset and put it into any profession in the world, you're going to be a successful person. So it's not really about what you're doing. It's about how you're doing it and what attitude you carry.
When it comes to trading psychology, and again, because it's so important in your eyes, I'm sure you've done a lot of work and have a lot of beliefs in it. My beliefs on trading psychology is around the idea of it becomes an excuse for a lot of people, where because people say it's so important, they might have a very bad strategy, they might have very bad technicals, and instead of addressing that real issue, which can be solved, they'll say, okay, my issue is my discipline, my issue is my this, that, and the other. And what they'll do is they will do everything in their power to improve their psychology. And I find that could be quite dangerous, because if you're trying to improve your psychology on a flawed system, on a non-profitable edge that you haven't defined yet, but you're trying to get affirmations, you're trying to believe in it, you're going to make everything worse, because you're doing everything on your mind you're supposed to, but it keeps failing and it keeps failing, and you think it must be my mind, it must be my mind. On that comment, how would you respond to a situation like this?
I completely agree on that. That's like, trying to start a car which is out of gas. That's what it is, right? So I completely agree on that. Unfortunately, people don't even get to this first phase. I believe the trading psychology is the second phase of succeeding into trading. The first phase is actually to find an edge, build a strategy, and then comes the discipline part. So I completely agree on you.
Well, let's talk through these phases, and I'm sure you've done it in your years. Let's say phase one is finding an edge, a predefined edge, giving it a name, giving it a system, and having everything noted down, and then testing it and so forth. That phase one of finding an edge, how would you describe that process from beginner to I now have a profitable edge, and then psychology after that? How would you go through that process?
If I have to put it in the most simple manner, I would say phase one should be divided into two things. The first thing should be gaining general knowledge. I mean, it's as good as the education system, for example. You spend the first 10 to 12 years gaining general knowledge about the world, learning about all the concepts and all the subjects that exist. And then after a few years, you specialize in one subject, right? And I feel that is how trading should also be looked at. First, you gain the general knowledge, you understand what exists, what doesn't exist, everything about trading. And then once you have that general knowledge, once you have that basic foundation, you understand what suits you, what is most logical to you. So like, for example, for me, the most logical thing I find in the markets is supply and demand, is support and resistance zones, right? So that is what I chose to specialize in. And then I spent my time building a strategy around the concept that suits the best for me. So I believe that's the second step. Find what you resonate with, understand what you can specialize in, and then build a strategy around it.
This thing that I do on basically every guest is I like to ask them, can you explain your strategy in a few sentences? Because it shows how clearly someone has their ideas and thoughts collected of a strategy. So if you could summarize how you trade and the way you view the market in terms of strategy in a few sentences, how would you go ahead and do that?
So if I have to sum up my strategy, I would say that I buy in areas where I have seen wallet moves happen in the past. And then I just wait for the price to come back to those zones again.
Okay. And usually you mentioned you're a day trader specifically. So are you more on like the scalping side, or is it, let's say you hold a trade for 1, 2, 3 days on average?
I don't hold my trades for 1, 2, or 3 days, but I would say I would call it like the average time I am in a trade is around 2 or 3 hours.
Okay, so intrasession kind
Yeah,
of.
correct.
So me too. I'm very focused on intrasession, and I like to be optimizing for certain things,
Yeah.
and I have my system for that. When you do look at an intrasession trade and your confirmation sets, you're looking for a historical price where volatility movements happen, and
Yeah.
And expecting a similar reaction. What are you looking for when prices are arriving to a zone like that? What kind of criteria do you have between idea of a zone and execution on that idea?
So the number one thing that I look for is obviously confirmation. I want to see the price reacting to that zone, because obviously one very important lesson I've learned is technical analysis is enforcing your ego on the chart. Because if you draw a trend line, for example, that's your ego on the chart, because the market has to do what it has to do. Doesn't matter, because the market doesn't know you've drawn a trend line over there. So if it has to go down, it's going to go down. If it has to go up, it has to go up. Doesn't matter where your trend line is. So the number one thing I look for is proof from the markets that, okay, it looks like this is a valid zone. And then I've built an entry system where I spread across my positions in a certain way, in a certain ratio, which puts me in a position where even if the price moves a little bit in my favor, I turn out to be profitable.
Okay. One of my favorite, I live my life in mantras. So I always have like certain things, whether written down or around in my room or just in my head, that I always repeat to myself. And I find it keeps me aligned, it keeps me grounded, and also keeps me on a correct path. And I have a bunch in life and also in trading. One of my favorite ones in trading is, I always say it to myself, a restricted trader is a profitable trader. Now, the reason I say that is because I didn't face too many psychology issues in my own journey. Could have been because of my situation, maybe my mindset from whatever. It could be a lot of external factors. Nonetheless, whenever I do feel any greed, fear, whatever, my approach hasn't been like, let me go meditate or journal or cold shower. I see this more as escapism. You have a root cause or an issue of emotionality. And instead of looking at the cause, where that comes from, traders often scapegoat to say, let me go to the gym. And so the issue is not solved, you just distracted yourself. So I never used to do that, and I don't do that. What I rather do is acknowledge my emotion. I'm a human, I can't remove it. I'm not a robot, so I acknowledge it. I'm aware it exists, but I try not to let it take hold of me. And that process of trying to not let it get hold of me is, I read it in some book, I forgot which one. It was like the deers you see in like the savannah in Africa. They are like, they hear a small sound, they run. They see a lion, they run. So they are always reactive. They're always fight or flight, but that's not how they live their life. They are calm, they're eating, they're grazing, whatever. And whenever they see a threat, they are quick to react. So the book was saying is like the mindset of a trader should be calm but alert. Not in a heightened state of flight, because then we will make impulse decisions. So deducing all of these things, I've always found that for me is like, I've got to be aware of my flaws. I've got to be aware of my threats in the market, the devil's advocate, the confluences against me. If I'm taking a trade for XYZ, what are the XYZ it could go against me? And it's just awareness. So I'm calm, but alert and aware. And then it's just repeat to myself, a restricted trader is a profitable trader. Now, the reason I say that is because I know my restrictions and everything is predefined. So if I feel like one of my restrictions is time, I will not take a trade outside of my trading window. And that window is fairly rigid. It's London Open and then plus or minus 15 minutes. So let's say 1 hour before London Open or 2 hours during the London session, I cannot take a trade. And sometimes I might have every other one of my checkboxes. But for me, a non-negotiable is time. So in those moments, at times on a moment of weakness, I'll be like, should I just jump in? No one's watching, why not? And sometimes it goes in my favor. And why didn't I? Then the next day when it happens again, the devil speaks in my ear and I think, let me do it, why not? And that's why in my head I always say, restricted trader is a profitable trader. Because the worst thing for a trader is you make an impulse decision that you know you shouldn't, and then you get a winning trade. Because then it reinforces this behavior of, last time I did a wrong decision and it made profit, so let me do it again. So for me, it's always just been restriction, profit. And that's a mantra I follow through. The number one question I have for you is, do you have any similar mantras for yourself that you repeat to yourself, you have in your mind, or maybe mottos for yourself that ground you and help you in your trading? And your thoughts on this statement of mine, which is a restricted trader is a profitable trader.
I love that. I just love what you said, because not just in trading, I think it applies to everything. Because as I would go ahead and say a restricted human being is a successful human being.
That's very true, actually.
Because
Yes,
if you
yes.
don't restrict yourself to certain things, you just go and become oblivious. Right? You have no idea what is happening, because
We end
and
up
I've-
following desires, impulse,
Yeah.
and primitive things, not success oriented things. Yeah.
Yeah, and I think that's why things like religion, that's why things like laws are put into place, so that we are restricted to certain things. That's why a yes or no should exist in every person's life, in every place, and in every field they are in. So I completely love the fact that you follow that, and I completely agree to it. As far as coming to mantras that I follow, I just follow one simple mantra, and that is risk what you can afford to lose. Because and I believe this comes from the place where, from my very early experiences, because initially when I started off, I borrowed some money from my mother to trade, and that was the kind of money that I could not afford to lose, and I lost that kind of money. And that is where it is coming from.
Okay, that's an interesting point, because thankfully I didn't have a situation like this, but it's a very common story. People risk their money from rent. They go into debt sometimes, and make these kind of tough decisions. And looking back in my years now, and I see people making this decision, I'm just thinking, please don't.
Yeah.
More because I know that no matter how good you are, no matter how smart you are, no one makes money in their first year.
True.
Even if you have the best education.
Absolutely.
So it's like, just take your time. Learn, make the mistakes on demo accounts or small money, and not on meaningful money. But people still seem to do it. And that's probably the elements you're saying of psychology, that if you just had some restraint or control, you wouldn't be making these early on mistakes. Briefly ago, I mentioned the idea of escapism within trading psychology. And what I see in the online space is a lot of trading psychology talk, and it's very generic. Everybody says the same thing, regurgitation.
Yep.
And I think it comes from a place of lack of experience, where if somebody hasn't traded for 5 years and been through the hard work, they'll just say what the other person said online because it sounds good. And no one can really challenge it, because everyone else is saying the same things. And that's why I don't like trading psychology so much, because it's very generic advice, and also very easily defaulted, in my opinion, because I tried all of these things that is typical trading psychology and didn't have a huge bearing. I agree, being restricted and disciplined in life is only going to be beneficial, not in trading, but in everything. But when it comes to trading specific psychology, let's say I'm in a losing streak and I don't know what to do. I feel overwhelmed. Or let's say I'm feeling the urge to over leverage. What am I supposed to do? All of these natural, everybody experiences emotions within trading. What do you do in those situations? Even after 5-6 years in the markets, it's something we all feel. How do you navigate these emotional moments?
So the number one thing that I do is I remind myself that whatever I've achieved is not something that has come to me because I'm super special. It has come to me because, I have done something, and that is why maybe I have gotten it. But just like I have gotten it, I can lose it as well. So I'm always aware of the fact that whatever I've gotten today can also be taken away if I don't deal with it properly, if I don't become the person who's deserving of that. And that keeps me very grounded, and that keeps me, keeps reminding me that success is something that is to be maintained all the time. You cannot just become successful once and then think that you've arrived.
Complacent, and especially in the market will humble you very quickly.
Absolutely.
It seems like, just reading between the lines of what you just said, and one of your main mantras is risk only what you can afford to lose. Am I correct in assuming you're quite a risk-averse person? You like to only take risks that you can afford. You like to be, you're very controlled in that sense. Is that your approach in general? Very risk-averse.
Absolutely.
And being a more risk-averse person, me too. I don't consider myself a risky person. And I think I'm throwing a hypothesis out here. Everyone has their nature, their temperament. And some people by nature are more risky. Some people run towards danger. Other people don't. I don't. Maybe it's from upbringing. Whenever I was trying to run in the street, my mom would be like, no, you're not running in the street. I don't know. It could be from anything. But I would hypothesize that those people that in their nature is less risk orientated tend to do better in trading. Would you agree or disagree?
I actually agree on that. And I feel the best trader inside of you comes out when you actually don't need to take that trade. Because if you're in a place, if you're in a position where you've told yourself that, it's okay. If I don't trade this month, it's okay. things are going to be okay. And I think that's going to only come when you have multiple sources of income, when you've built something for yourself. And I believe that is very important. I feel people run towards danger when they are in positions where they have no option but to run towards danger. Otherwise, nobody really likes to be in a position where they want to blow their accounts, right?
True. You know, I find it tough in a position of influence, people watch and listen, is because I can speak on my experience. I can speak on what the cards I've been dealt, and navigate that. But I know that I'm not in the same situation as a lot of people. And I know my blessings. Being born in the West is a blessing. Having a family like I did that supported me is a blessing. And not having debts and kids and all of the working 3 jobs, I didn't have these difficulties in life. So when I come across traders that are in these tougher situations and they're looking for advice, I do struggle to advise them. I know what I did. And this thing that you're saying of, you know, be risk averse, risk only where you can afford to risk. It's easy to say and think when we are in a blessed situation. Now, someone in a more tough situation, the advice you were like, okay, get your finances in order. I'm a firm believer in this, where trading is a glorified industry through social media. That's issue number 1. It's made to seem easier than it is. That's issue number 2, because now people that are desperate, that want to make money, they're thinking, what can I do? Trading looks easy. Everybody's doing it. Everyone's a millionaire, and they seem to do it in a few months. Let me give it a go. Not giving the respect to the markets, which is we're up against institutions that spend billions of dollars on tech, AI stuff. It's one of the hardest things to do, actually. So that is issue number 1. Issue number 2, I find, is the barrier to entry is so low. Maybe in India, not so much, but it still is. You can have no qualification, no examination, you could do 1 course, learn baby pips, and open an account, whether brokerage, whether prop firm, like this. And now you're a trader. And now the perceived upside of I can be prop firm 10% per month, I could be a millionaire like this. Perceived ease and perceived success is very high. So when we have a mix like this, where it's low barrier to entry, very perceived high success, let's say high success rates, and income potential is very high, it's the place where people run to. And they don't give the respect that's needed. And I've always been a proponent of, I didn't take the route of let me run towards trading. I had my university base, I had an education to fall back on, and I had a supportive family. So that was my infrastructure I set up. And what I usually tell people is, if you're in a financial burden, if you're in debts, don't run towards the market. As easy as it may seem, as much money as you can make, which is true, you can also lose just as much.
Absolutely.
Because you make 2% on a prop firm and you might make a few $1,000s, and in India is definitely meaningful. I see so many people spending $500, $1,000 per month on these challenges and failing consistently. And then I ask them, how much did you spend on education? Oh no, I watched some YouTube videos. So you're telling me you spent $5,000 on prop firm challenges and failed, but 0 on education. Maybe that should be the other way around. So these kind of beliefs, I've always said, trading is not vehicle number 1 in life. Number 1 vehicle in life is get a job. And as non-popular as it sounds on the internet, there's nothing wrong with a job. Get a job, get a financial base, get some savings, get rid of your debts, get rid of the anchors you have in your life, because these anchors that you may seem as irrelevant, they will be so much more amplified in trading. And as you said, if you're only running towards risk, if you have debts to pay or bills to pay or struggles, whereas in my situation at university, my father was paying for everything. So any money I made was a bonus. It was not a requirement. So I wasn't chasing profit right away. I was learning and taking that time. But I know that if I was in a situation of I have big bills to pay, I would gamble. I would do whatever I can to make it work. And that environment is more conducive to success than individual. It's the environments. So I think solving the environments is step 1, as you said. Then it's kind of said, let's build the strategy phase, as you were mentioning. I want to explore that topic a little bit more. Let's say somebody's organized their finances and saved a bit. They've got now a bit of a budget for good education, a bit of a budget for prop firms, and now it's a period to learn. And they're going through, price action and whatever. And they've got some concepts that they like, and they specialize in it, as you said. Let's say you're starting to specialize now. How do you go from, I know a lot about this topic, I see a lot, versus I have now proven I have an edge and now I can go and buy these prop firm challenges? That window in between, what do you think that has to look like for a trader?
I think the number 1 thing somebody has to understand in this phase is backtesting. Backtesting, I feel, is one of the most underrated things, especially, from my experience in the Indian side of things. Backtesting, people don't like backtesting. People don't want to do backtesting.
Because it's like homework. No one wants to do the boring homework.
Absolutely. Nobody wants to do the boring work, but everybody wants the excitement. Everybody wants the thrill, and everybody wants to try out the strategy without testing it. But that's like that's like, just jumping in the water without knowing how deep it is. So I feel the number one thing is when you feel, and I think that's one of the best ways to even get confidence in what strategy you are trading, right? And I feel people don't understand the intensity of this, because one side you're thinking, okay, I've built a strategy that's going to make me financially free. But at the same time, I don't know how much percentage of win ratio I'm going to have. I don't know how many trades I'm going to get on an average. I don't know these basic
data.
things.
People don't know their data.
People don't know the data, right?
Yeah.
It's like, okay, I start off a restaurant, but I don't know what's my cost. I don't know what's my rent. I don't know all of this. You're a businessman without knowledge with your own business.
I like that, and I do think it's very important. One thing I find with backtesting is people they know it's important, and everybody talks about it, but they get to backtesting. I remember me too, when I was seeing everyone talk about backtesting, I said, okay, let me go and backtest. And I go on the weekend, I open up the charts and I go on replay mode, and I just start pressing play and drawing some lines and drawing some trades. Very aimless. And then as with maturity, I found my objectives with backtesting. For someone that knows they should be backtesting and is putting in the time also, but they're doing it without true aim or true direction. What is the purpose of backtesting, and what are we really looking to achieve? Because I had a guest on recently, and he had a clip that went viral, which is like, backtesting is bullshit. He was like, backtesting is not needed because historical price, the market's changed and so forth. And that's what was his opinion. Right or wrong, people have their beliefs. What is your approach to what is the objective of backtesting, knowing it's historical data?
Yeah. I think the objective of, and I agree on the fact that markets keep changing, markets, do change. But once again, I feel that happens over a course of time. It happens in the medium term or the long term. So just saying that, backtesting is bullshit because it's historical data doesn't really apply to everybody, especially the people who are trading in the short term. Maybe it applies to people who are trading in the long term, or maybe like positional strategies or swing trades. Maybe it applies to that. I don't know. But I feel it doesn't apply to people who are trading on the short term, because you have to backtest the short term area, and markets just don't change overnight.
Not overnight. I think looking at price action of 2005 is probably not going to serve me.
True.
But looking at everything of 2023 and 2024 probably will serve me.
Absolutely.
In that process, let's say somebody's like, okay, I've got these ideas of a strategy. I've got these concepts I've learned. I don't want to go and backtest it. Now I'm going to start January 2023 and I'm going to go all the way to December. 1 year of gold, let's say.
Yeah.
And they go through candle by candle and they're doing that process, and it takes them a few weeks.
Yeah.
What are they really looking for in that backtesting? What are they trying to achieve? Well, let's say they go through the whole year.
Yep.
How do you know at the end of the year if it was a successful backtest or it was a not successful backtest?
I think when you truly backtest with a lot of honesty, I feel one of the biggest mistakes people do with backtesting is they lie to themselves. Like, before you start backtesting, things should be very clearly defined. Like, what is the time frame I'm looking at? What session I'm looking to trade? Because what I've seen people do is, okay, their strategy says I'm going to trade the London session, but when they're backtesting, they see a trade opportunity in the New York session and they consider it as a trade they would take. Well, actually, they would not take that trade in reality. So I feel people really dilute the data by lying to themselves when they backtest. I feel this is one of the biggest problems. So the number one thing to be achieved with backtesting is make sure that the data you're getting is actually true and not diluted by your own self. But once again, to answer your question, somebody, how would somebody define that my backtesting was successful? I feel you should be clearly aware of the amount of trades you would get on an average in a particular month. Second, because that way is going to help you understand and set expectations with yourself that, okay, how many trades should I expect? And when you're clear with that, you don't go and overtrade, because you know in your head that, okay, this month I should expect maybe 10 to 15 trades. That's one. Second thing, maybe the time frame, maybe the timings. Like, for example, when I was backtesting, I realized that the maximum opportunities I was getting was maybe around 12 to 1 in the afternoon Indian Standard Time, and that has given me a very good judgment, and that also helps me not stay on the screen for 24 hours, right? So I know what is the time when I'm most likely to get an opportunity. Once again, I'm not saying that's the only time I'll get, but I have a better chance of getting an opportunity during that time. So I feel understanding what times do you get most of the opportunities is also a goal from backtesting. Another thing I would say is the amount of risk to reward ratio that you're looking at on an average to be achieved, so that will also give you an expectation. Because what I've seen people do is they take a certain trade and then they're like, okay, I'm expecting 1:7 on this. but do you have the data? Does your data on an average give you that much? And if the answer is no, then you're just setting unrealistic expectations. So you should be very clear with the amount of risk to reward ratio your strategy gives you. And then another thing could be, you can say, like maybe what is the kind of stop loss trailing you're going to follow? What is the ratio of, let's say, the trades that you take, they go in your favor and then they drop back down. What is the ratio of that? Then that is going to help you manage your risk much better. So I feel these are few key pointers which somebody should look at when they're backtesting. And if you have identified all these things about your strategy, I would say that you've done well enough.
These kind of things, I think they're wonderful. Is that something that is predefined before going into the backtesting session, or is somebody backtesting to find that data? Because let's say I come into a backtesting session and I say, my risk reward has to be 1 to 7. And then you're just doing that. And then you will find the trades that are not, and you'll have your result at the end. I gained X at the end of the year. How would you then see, how can I improve my system? Or is that trial and error for you? Or how do you optimize the data that you've predefined? Let's say you know your trade frequency, you know your win rate you're targeting, you know your risk reward you're targeting, the risk you're targeting that is predefined. How do you now go and say, I found at the end of the year I made 10% gain. That's pretty good, and I'm profitable, and this is a good step it's a step in the right direction. How can I go from an average system and an average edge to let me improve it in every area possible? How would you go into the next phase, which is optimization of an edge?
I feel this is done by listening more to the data, because like you said, everything can't be defined before backtesting, right? There are certain things that you learn while backtesting. There are certain things you understand while backtesting. So I feel the first step is to just give a little basic definition. And I feel that's more about setting rules for yourself. And then when you go ahead and backtest, then that's when the optimization comes in, where the data is telling you certain things. So earlier when I started off understanding gold, I used to think that New York session for me is the best session. But when I was backtesting, the data told me that no, for you, the London session is the best session. And that is when I made the change. That is when I told myself that I'm going to avoid New York session and I'm going to prefer London session more.
Fair enough. So in this process of backtesting, system building and optimizations, there are certain realizations we all had, including myself. What would you say were your conclusions or lessons from your time in backtesting in terms of what is the optimal risk reward in your system? How would you divide your partials? Like, would you hold full volume to this TP, or would you have 3 levels, 2 levels? In terms of trade management, risk, do you believe in standardized risk, or do you have winning trades, risk more, not so good setups, risk less, or standardized? Trade frequency, I know you're only trading one currency pair, and time of day. Like, what is the data? What is the conclusions from your time in backtesting and your strategy?
So backtesting has actually helped me define these things very nicely and in a very clear manner. And I would say an ideal risk reward ratio for me would be somewhere between 2 and 3.
Okay.
And let's say, how do I risk? I follow standardized risk. I don't risk more on winning trades and something like that. I follow standardized risk. And I feel the more simple and the more defined your strategy is, the better it is to follow in the long term. And that's what I have done with my strategy.
Why do you choose a standardized approach as opposed to this trade setup is A+, I know it has a 80% win rate, and some people do risk more.
Yep.
Why have you chosen to keep it still linear or standardized risk?
I feel in my experience, most of the time, when something like this appears, where you feel extra confident about it, I feel that's where most of the people end up losing. And that has also what has happened in my case, where, when I feel, so it's about, there is this standardized risk that you've kept for yourself. Now you see an A+ setup. That's where your mind and your psychology goes a little bit up. You get overconfident. And I feel that is where you should be, under control the most. And then if you have a standardized setup, it helps you a lot. At least it helps me a lot, right? To stay a standard in terms of my psychology as well.
Me too. I'm on that end of the spectrum. I think on this one, there's no right or wrong.
Yep.
I've asked this question to quite a lot of the traders, and some people are, I keep it standardized. Other people are like, well, how do you expect to scale? And I got asked that, and I was like, Valid question. How do I expect to go from making X amount per year to doubling it or 10xing it?
Yeah.
And the few people I spoke to were like, oh, the only modification you can do is if you have a good strategy, a winning strategy is play to your winning trades, play to your data, and increase your risk and scale your risk. So one system I've seen is like A+ setups, double the risk.
Yeah.
And this only happens when it's really controlled and predefined.
True.
If you just feel like it's a good trade, that's dangerous, which is what you said.
Absolutely.
If you have this checklist, step by step, and it does check every box, so it is your system, and you have a catalog of evidence to show you this trade type has this average win rate, this risk to reward, and XYZ, and it's fitting everything. If I've seen it 1,000 times, 1,001 should be fine.
True.
So I think that's the clarity that people need, which a lot of people maybe don't take it to. And then certain people are like, well, let's just increase our risk on these trades because we know if it has got an 80% win rate, it's worth the additional risk. And they become risk off on certain trades and risk off on the weaker setups. And I'm on the other end of the spectrum, whereas I like to standardize my risk and play with the other metrics, which is I'd like to optimize my risk reward and win rate and not my risk. What do you do in terms of risk in winning or losing period, especially because you are quite a strong proponent of psychology? Do you keep a standardized even if you're in drawdown, even if you had 10 losing trades in a row, or do you modify based on the context?
So whenever I feel that my psychology has gone up or down, I just cut my risk in half. That is what helps me come back up and then get it back to standardized. But on the thing that you said, that how do you expect to scale up? I actually don't think that is the right point to even speak about in trading, because people don't understand that trading is actually just multiplication of money. It's not creation of money. People here are trying to create money through trading. You cannot create $1 million out of $10,000. You have to multiply your way through it. And that is only going to happen when you have a decent principal amount to invest.
It's the capital, yes. And it's back to the thing we said of instead of trying to learn how to do 1,000% a year, learn how you can get $1 million in funding and just go for 10%. You'll make more money that way.
Absolutely.
I'm in agreement with this. With the comments of when you're in a heightened state or lower states, let's say you're feeling negative, you modify your risk to get clarity, I guess.
True.
To come back to normal and then proceed accordingly. How do you identify this? Because it's hard for everyone to be honest with themselves and realize you have a problem, as you said earlier on. What kind of mechanisms do you deploy for yourself to say, okay, I'm being too confident, let me risk off, or I'm doing really bad, let me risk off? Obviously, you're tracking your trades, tracking your performance, but what is your cutoff? Is it like after X amount of losses, or is it you have a sense of your personality, you have a sense of your mind? Is it your inner thoughts, or is it I've taken 5 losses, now it's time?
I think it's a mixture of both. Let's say if I take 2 stop losses back to back, that is when I feel that I should ease off a little bit.
Okay.
Yeah. And also,
why only 2?
Why only 2 is because I feel when you go beyond 2, let's say you have your 3rd and the 4th loss, that is where things go really bad, and that is where you really get into that negative state. But I feel 2 as a number for me is considered normal.
Would it be 2 irrespective of how quickly? For example, if you take 2 losses in the same session, that has a different effect versus 2 losses, but one was on Monday, one was on Friday.
Yeah.
Is it just 2 losses, or is it 2 losses very quickly back to back?
I would say it would be for me 2 losses in the same week.
Oh, in the same week.
Yeah.
Okay, this is interesting because I don't know where I read it, but it was the idea of we have a win rate. And let's say, for argument's sake, my win rate is 50%. And I have a 1 to 3 risk reward system, so I am profitable. I know for a fact if I take 10 trades, for a fact, 5 will be losses. That's my system. So if we now get reactionary to ordinary data, which is I will get 5 losses, and I start to modify things because I got 5 losses, that's the wrong thing to do. So now we don't know how our wins and losses will come.
True.
And the reality of a trader is we don't enter a trade thinking we're going to lose. Otherwise, we wouldn't enter. So we think we're going to win, and we get a rude awakening, which is I took a loss. But we remind ourselves this is fine. This is my data. This is factored in. Now, the issue for a trader becomes is you were convinced it was going to be a win. It ended up being a loss. You reassure yourself this is fine, and you keep going. And then you take another loss. And then, okay, this is another blow, but I keep going. And each person may have their own tolerance before they're like, okay, I'm cracking. But the sentence or quotes I saw is like, our wins and losses are distributed randomly.
True.
The random distribution of the market is not going to be so beautiful that it's going to be win, loss, win, loss, win, loss. It might be loss, 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 win, 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 win.
Yeah.
So that is still my 50% win rates. That is
Yeah.
still my data. Everything is fine, but the distribution was not in a favorable way.
Yeah.
On the other hand, I might have 5 wins in a row and think, my strategy is amazing. I'm the best trader. When in reality, you still have a 50% strategy.
True.
It's just it came in a different order.
Yeah.
With that being in mind, would you not feel you're reacting too soon? Let's say you have a 80% win rate.
Yeah.
And your 2 losses that you have taken are the valid losses,
Yeah.
factored in, part of your data, you followed the plan,
Yeah.
which you should be saying everything's okay.
Yeah.
But then you cut your risk. And now the next trade is a win that was supposed to cover these losses, but now they don't cover your losses because you reduce your risk.
Yeah.
What do you do in that situation?
That's a very good point, actually. And I feel when I reduce my risk, that's actually to get myself back into the game psychologically. From a quantitative perspective, from a data and analysis perspective, what you said is absolutely correct. But it is also, I feel, more about me getting back into that zone.
Okay.
And understanding that, it's just part of the process. But let's ease off a little bit. And since we have spoken about me being a very risk averse trader, this is what I like to do.
Makes sense, yeah. When you are in a heightened or weakened state in terms of psychology, you modify your risk and you have your decision making for that.
Yep.
Maybe after two trades of loss, or maybe you're just feeling negative or whatever in a day, and you say, okay, I need to chill out today. Let me reduce my risk.
Yep.
That's one kind of input, stimulus, and reaction, meaning reduce risk.
True.
What other inputs do you feel and what kind of reactions do you have to those inputs in a trading psychology sense?
In a trading psychology sense, I would say the only thing that I look at is, once again, the risk, what I'm risking, what could go wrong possibly. And for me, the number one thing has always been to ask myself, what is the worst that can happen? Because I feel that I have gone through the worst throughout my trading journey, and that has really helped me develop this mindset where I constantly ask myself, what is the worst that can happen? And whenever I answer this question to myself, I should be okay with the answer, because if I'm not okay with the answer I'm giving myself, something should be changed.
In your experience within your own trading and also your people you've helped, what is the, let's say, top 3 or 5 trading psychology issues you see within people or yourself?
I feel the number one issue I've seen with the traders, especially in the Indian community, is that one, they're extremely distracted. Extremely distracted. Because when you look at people inside the trading community, they forget why they started trading. They forget why are they here for. Because I've seen people who started off trading, they get into selling courses illegally of other people. They get into, going on social media, trying to comment negative on other people's stuff. Did you come into the market to do this, or did you come into the market to make money and change your own life? I feel the number one issue psychologically is people get too distracted. Once again, I don't completely blame people for this. I think social media has a lot of role to play into this thing, but I feel the number one problem that people are facing is distraction.
There's a sentence that goes around, which is, people would rather be right than make money in the market.
True.
And my assessment of this statement is that people get too caught up in the social media thing of like, oh, I posted my strategy, I have people following me, so I have to come across as this great trader.
Yeah.
And then in the markets, what will happen is I have to force my beliefs, and I know this strategy works, I have to keep going, whatever. And if we just remove our ego and relax for a second and say, well, I don't know anything, the market is always right, as you said. I'm here to make money, so if I'm going to be wrong, that's okay. I don't have to prove anything to anyone. My objective is financial. When somebody is in that situation, and I think it's abundantly common, not even for just educators, like if you have 3 trading friends and you like to share your analysis with each other, pride comes out, and you say to your friends, I'm buying EU today, and then you keep forcing buys on a bearish day. And even if it's just to your 3 friends who are not going to judge you anyway, I think it's a very normal situation for people to end up in. And it's a psychology thing, because it's not a technical issue, it's a mindset issue. What do you think someone in that specific situation should do?
I feel the number one thing they should do is understand that they're here to make money again, and not to be perceived as this great trader. Because eventually, even if you manage this perception of this great trader that you are, at the end of the day, if you're not making money, you haven't achieved what you came here for. And I feel that is the most important thing. I would rather be a profitable trader than being a famous trader who's known for being the perfectionist. I would rather be the profitable trader because I did not come here to be famous. I did not come here to be the social media figure. I, in fact, came here to make money.
There's also this idea that I find very common, and it links into how we've taken this conversation, which is someone will spend a lot of time backtesting, and they will go through the whole process we've spoken about, optimizing, questioning, testing, split testing, and so forth. And they define a wonderful system and they find profitability. And in these simulators or backtesting situations, they perform great. And they're like, okay, every time I go and backtest, I always come out with 100% gain, whether that's in a couple of months, whether it's annually, but I always come out very strongly in the positive. I see so many people do this. It's not like I made 1% a month. It's no, I made 50% this month, and I did it every month this year. But then they come to the live markets and they keep losing every month. But in the backtesting environment, they were crushing it. There's a gap there.
100%.
What is that gap, do you think? Why do people end up, these rock stars in backtesting, and in the live markets, they just keep failing?
I feel the number one gap is something I already told you, which is people dilute their data a lot. People lie to themselves a lot. And that is exactly why you will feel that, oh, I'm the king in backtesting, but actually you are lying to yourself. You took that trade which you would actually not trade in real life, right? People have seen people backtesting and putting trades at 4 a.m. You are not going to be up at 4 a.m. trading. That is a trade that you would not actually trade. That means your data is diluted. Number one, people are just not honest to themselves. And then the second thing is, I feel, is a psychology issue where, you've got the edge, you've got the system in place, everything is fine, but now it's time for you to work on your mindset.
I agree. The novice backtester is just going to be unrealistic and just going to keep holding the volume until 1 to a million risk reward, as opposed to, in reality, they'll probably cut it at 1 to 1 because they got excited. And the answer I'm seeing is basically, one thing is a simulated, comfortable environment where you can just press next candle, next candle and speed through. Whereas in real life, 1 hour, you got to sit and watch that for 1 hour.
Absolutely.
And that perception of time in backtesting is not felt. The perception of really losing money is felt, whereas in backtesting it's whatever, it's fake money. So there's these new feelings that come around from live market to backtesting, and I think that's where it comes to the psychology, which is why I wanted to take the conversation here. Let's say someone has now done really well in backtesting and they've done it correctly, not just unrealistic diluted, but they've done everything properly. And they've got their data, they've got their restrictions, they've got their rule sets, and they come to the markets and they just can't seem to make it click. Psychology issue. What do you think they should do? And I think that's like somebody that's done hard work, done everything correctly, probably spent a couple of years, but they're just on the edge of making money. Is that last push? What do you think someone needs to do in that moment?
Before I answer that question, I would like to share one important thing, that has really helped me backtest properly, which was, I always ask myself, while backtesting, I always ask myself, okay, if I took this trade in real life, would I behave like this? And if the answer is no, then I don't consider that data into my backtesting data altogether. But to answer your question, let's say if somebody has backtested correctly, they've been honest to themselves, but now it's just about that psychology issue. I feel the number one thing a person can do is just ask themselves that, am I missing something? In terms of mindset, maybe. So there's this concept of empty cup. Okay, it's a very interesting story. Maybe you can go on YouTube sometime and watch it. It's about a guy who comes from the West, goes to a monastery full of monks, and he says, I want to learn Kung Fu. I'm the prince of this and that. But now the master over there makes him do all the odd jobs, like cleaning and all that. And that guy is like, you're supposed to teach me Kung Fu. I think you've forgotten that I'm the prince. And the master goes like, this is the problem. In your cup, the cup is full. If you fill a cup that's full, it's going to overflow. So in your cup, there is that, I'm the prince. So similarly, maybe your cup is full. Maybe you think, oh, I've got the best system in place. Oh, I've got the best backtesting data is in place. Maybe it's time for you to just go zero, empty your cup.
I love that, yeah.
Empty your cup and genuinely see, do I actually have the right backtesting data or am I missing something? I think that self-reflection is extremely important. Second thing is just fix the obvious. just fix the obvious issues which you see that you're making. Maybe discipline is one of the issues. Maybe revenge trading is one of the issues. Maybe impatience is one of the issues. It's going to be very obvious, because if you're actually trading a strategy or a system that actually works, that has an edge, then it's going to be very obvious in terms of what mistakes you are doing as an individual. Because if the system works, the system is not going to be flawed. The system is not going to make mistakes. It's going to be you who will be making the mistakes. So I think then the second thing should be fix the obvious.
I love this. I love this analogy. And it brings me to an idea that as you were speaking, it came to me is when somebody is buying education, they're obviously buying education from someone they like, trust, and believe. So there's a lot of emotion tied to this.
True.
And it's like, and we see it a lot in the space, which is like a cult, which is like, my mentor is better than you. My mentor is better than your mentor. My mentor is the best. So when we put so much belief on anyone, and so much expectation on anyone, and then we go through the education, we assume it's the best thing on earth. True. And everything is factual, which may be true for some good mentors, and maybe for some other mentors it might not be true. What do you think should be the attitude and mindset of somebody coming in, buying from someone they like, trust, and believe, to make sure that they don't go astray with education?
I feel at the end of the day, the only purpose, once again, reminding people again, you came into this market to make money, not to praise somebody or make somebody a hero. Right? So you came to the market, okay, you trusted somebody, you bought their course, you learned from them. Now the question is, are you making money? And now once again, this can be a double-edged sword, because maybe the mentor is not good enough, or maybe the student is not good enough, because not every student passes the exams. Right? So maybe the student is not good enough, or maybe the mentor is not good enough. But eventually, at the end of the day, are you making money? If you're not making money, then either of this has to change.
This concept is very true. And what I've said previously is we have a bell curve. And a lot of things in life follow a bell curve. And now the problem is, what people believe is, well, you have let's say a student success bell curve, which is you'll have 10% of students that will always fail. They're the degenerates that never try and never pay attention. It doesn't matter how good the teacher is, they will always fail. You also have 10% of people that no matter who the teacher is, they will always succeed. They work hard, they're exceptional, they have high IQ, whatever. You'll always have exceptional, you'll also have the terrible. And a lot of people fall in the middle. And that's just the normal distribution of anything.
True.
Now, the job of a mentor, I think, is to shift everyone to the right.
True.
To make the worst student less worse, and the best student bring the best out of them. But it's going to be very unlikely any mentor can take the worst student and put them in the exceptional category, because it requires too much from the individual. So I think that is also a valid point you say of educators are not miracle workers, and there is a lot of self-accountability with anyone. Regardless, let's say I have honest intentions and I'm somewhere in this normal area. I'm neither exceptional, I'm neither a degenerate, I'm normal. And I have true intentions, I'm going to work hard, and I'm looking to find a good education. And I look to the online, because that's where else am I going to look? How can you deduce, especially in the Indian market where you said there's a lot of scams and fakes, what do you think is the criteria for an individual looking for good education to decide who they should go for? Because the problem realistically is more followers equals better trader. And that's the perception. Better Lamborghini equals better trader, which is not reality.
True.
How would you recommend a newcomer to say, to avoid all the scams, have this criteria before you pay anyone?
So I think the most important thing anybody should do before they buy anybody's course is gain all the general knowledge possible that is there for free on the internet. Honestly, I even tell this to my community, you don't need to buy my course. I think I'm one of the very few people who actually tells their audience, don't buy my course. I tell my community, don't buy my course, because actually I myself, never bought a course. I've learned online through trial and error. But if you've got some money to spend on education, if you want to, smoothen your learning curve and fasten your journey a little bit, you can get structured knowledge over here. But the first thing that I tell everybody is, before buying any course or spending any money, gain the general knowledge, because that general knowledge is going to help you understand that, do I even resonate with this guy? Because there might be a trader who says trade without a stop loss. Now, if you don't have a general knowledge, if you don't have this basic common sense that stop loss is essential, you cannot succeed without a stop loss. You're going to buy that guy's course, and eventually end up ruining your life. So I feel the number one step is to gain general knowledge and understand what is right and what is wrong. What are the fundamentals of trading? And that's going to help you resonate with people. That's going to help you understand, okay, I do resonate with this guy. I like his style and I would want to take up this. So I think this is the basic criteria.
I think that's very true, and I'm in agreement. The problem I find is the educators and scammers, they're always one step ahead. They're always doing another thing. And I see all kinds of things where some people will use religion. They'll come across as this very pious, religious person. And therefore the individual will be like, well, if he's so religious and he's doing all of this, he's not going to scam me. And usually they do. So it becomes a game of like cat and mouse. Like it becomes very hard. But and that's the unfortunate truth of the industry. What I kind of ascribe to people is due diligence. You have to do it if you're gonna give your hard-earned money to anyone.
Absolutely.
Be aware of what's right and wrong, and that's upon you as an individual.
Yep.
If you get scammed, part of the mistake is you.
100%.
You got scammed. You gave the money to the wrong person. You should have known. Another thing is like the responsibilities of an educator, in terms of if we're just going to post a lifestyle, anyone can do that, especially as we know how rented and faked lifestyle can be. It becomes almost like the guru blueprint, which is sell a course, use the revenue to buy a car, to sell more courses, and there's just an endless feedback loop. What do you think is the responsibilities on the other side of an educator to make sure we are doing right by our audience?
I feel then, first of all, as an educator, you should take things extremely seriously and understand the intensity of things. And I feel that can only happen when you yourself have gone through that grind. I know how it feels to be on that end, because there was one point of time where I was at that end. I was at that person who was trying to learn and understand things. So I feel if you are a genuine guy who has really gone through that grind and understood how things happen, I feel you would automatically take things very seriously and understand the intensity of that, because here you are actually playing with people's lives. People are trusting you with their money and expecting that, okay, this guy is going to help me change my life. And I feel that's a big responsibility to have. So I feel people should really, really take that seriously, especially if they come with genuine intentions. Once again, if the intentions are not in the right place, then I guess the entire discussion is irrelevant. So I feel that is one very, very important thing that even I look at. And the other thing that I always tell my community is I am always there to help you guys out. I'm generally always there, because the only thing that, you know, keeps me doing whatever I'm doing is seeing that there are people who genuinely want to learn. Because other than that, if you look at like we were just discussing earlier, if you look at the prices that I have on my course, is just peanuts. Right? If I want, I can sell them at 10x more, and there will be people who will still buy it. And one very interesting thing that you said about the lifestyle content and the fake and the rented thing, unfortunately, I feel to some degree that is also important, because most of the people are attracted by that. Unfortunately, because if you are always posting backtesting data and Excel sheets, nobody's going to be, attracted to it. So I feel that is maybe some dirty work you have to do whether you like it or not. And I feel that's why I post a lot of lifestyle. I don't know if you checked out, but I do post a lot of lifestyle content. But eventually, I feel at the end of the day, if you're providing that value, and if you're taking people to the right direction with right intention, I think it's the right thing to do.
You're still quite young, 22, and you've already achieved a lot at your young age, financially, and also moving to Dubai at a young age and so forth. But you have a lot of time ahead of you in your 20s.
Yeah.
What do you want to achieve in your 20s moving forward?
I feel for the next 4 to 5 years, I really want to focus on building a strong cash flow for myself through different ways. And strong cash flow, we're talking about good numbers where, even let's say if I'm trading $100,000 account and I have, let's say, a business that's generating me $25,000 a month, for example, I will be automatically more confident as a trader, because I know, let's say if I blow up my account, 25K is coming next month through this business. So I feel that is going to complement my trading a lot in a very positive manner. So that is what I'm focusing on.
What kind of areas are you looking to generate these cash flow businesses?
The main area I'm looking at is all the unconventional, non-traditional businesses. You can, e-commerce, drop shipping, AI, digital marketing, all these things. These are the areas I'm looking to explore. I am already into one of these spaces, e-commerce. I'm still, understanding things a bit and seeing how I can build cash flow through this. And this is my priority as of now.
Awesome, bro. Well, I wish you very well in this journey. I'm sure you're going to keep excelling and becoming more and more prominent in your space in the Indian market and dominating in Dubai too. So, bro, thank you very much for coming on. It was a nice chat we had, and I'm sure we'll stay in touch. We're in the same city.
Thank you so much for having me, brother.
Awesome,
It was
bro.
absolute pleasure.
Let's go. Boom.